Welcome to Requity Insights, a channel dedicated to documenting our journey to 100 world-class communities. Welcome back to today's episode of Requity Insights. Today we're going to be discussing an important topic for those that are considering investing in an RV campground. One of the most crucial aspects to acquiring an RV campground is selecting the right criteria for your investment. So from the location to the amenities to whether or not to go with an established franchise like a K-Way or Margaritaville, today we're going to provide you with valuable insights into our selection criteria and how it's going to help you make a fully informed decision. So whether you're a first-time buyer or an experienced investor, stay tuned as we explore the top 10 most important investment criteria. Criteria number 1, what are your long-term goals and what is your exit strategy? So consider your long-term goals and determine your exit strategy before ever making an investment in an RV campground. We always say start with the end in mind or the exit in mind. Some potential exit strategies may include selling to another investor or a larger group corporation. Maybe you want to create generational wealth and pass it down to your family members, or simply just want to liquidate the asset at some point. Ensure that your exit strategy is aligned with your investment goals and that you have a clear plan for executing it when the time comes. Think about that on the front end before you buy. As a group, we often ask ourselves, what do the institutional investors want to see? Because we know they're going to pay the highest multiple or the lowest cap rate for the exit if that moment were to ever occur. Number 2, number of sites and the site quality. The number of sites in an RV campground can impact the revenue potential and the management requirements. A large number of sites can generate more revenue, but it's going to require more management and more maintenance resources. And also you have to consider that a smaller campground might not even be able to financially sustain a full on-site staff, and we always want to encourage you not to buy yourself a job and be the one wearing all the hats. So consider your investment goals and your available resources when choosing a number of sites for your RV campgrounds. Regarding the site quality, just ensure that the RV sites are spacious, level, and easily accessible. Don't just focus on how many sites, but focus on the quality of those sites, as that's really going to be what determines how much potential revenue you can generate from each and every site. Number 3, choosing your market and your location. Consider the proximity to major cities, their natural amenities, popular attractions, and general accessibility. Consider demographics such as the median income, lifestyle preferences when it comes to choosing your investment, and just select a location that caters to those demographics. Conduct your market research to determine the level of demand for RV campgrounds in that area. Ensure that there's sufficient potential to be able to create revenue growth, and check out all the comparable properties to see what's possible. Number 4, amenities. Amenities are an important factor in attracting and retaining your customers. RV campground amenities can range from standard items such as restrooms, bathhouses, and laundry rooms to more recreational spaces such as swimming pools and playgrounds, game rooms, and fitness centers. Consider the amenities that are important to your target market and evaluate if your deal has already has some of these items or if you need to add them. And if not, think about weighing the cost of installing and maintaining these amenities against the potential revenue they can generate. Do you need more manpower to be able to maintain these amenities? Are these amenities going to be income generating, or are these amenities going to be more of a cost center? Sometimes it's okay if they're a cost center, but you as the operator have to believe that it's okay that it's going to generate more expenses because it's going to add to the overall value of the community to keep the guests coming back time after time. So amenities can also differentiate your RV campground from the competitors in the area. So consider looking at what they have and find unique and creative amenities that can really set your campground apart. Number 5 is infrastructure and utility systems. The infrastructure and the utility systems of an RV campground are critical to its functionality and its success. And it can include your water, your sewer, your electric, your roads, and your internet systems. Ensure that all infrastructure and utility systems are up to code and in good working condition, as any issues with these systems can lead to customer dissatisfaction, complaints, and potential issues with planning and zoning, and that is the last thing you want to deal with. Consider the costs of upgrading or maintaining these systems and factor these costs into your initial investment analysis. I think, again, it's not just about how many sites you're going out and purchasing, it's about the quality of these sites and making sure you're being thoughtful about the deferred maintenance needs of the campground. In your due diligence checklist, you have many items for each of these key points to be able to make sure you are paying attention to what's the quality of the electric, how many are 30 and 50 amps, what's the quality of the water, is it private or public, and if it's private, making sure you're getting the proper inspections. The same thing goes for your sewer, and the same thing goes for even your roads and the size of your sites. Number 6 is the type of RV communities. So we recently discussed in our previous video called different types of RV communities and RV guests. You can click the link to be able to go back and view it, but make sure you want to see if you want an RV park, an RV campground, or an RV resort, because there can be big differences in your pricing, your amenities needed, your staffing, and things along those lines based on the type of community you're seeking. Number 7, is it seasonal or is it transient? So seasonal campgrounds typically cater to a long-term guests that are there for either a period of months, often during a specific season, while transient campgrounds cater to more short-term stays and consider going for a few days or a few weeks. Consider the pros and cons of each type and choose your market based on your investment strategy. So seasonal campgrounds, they might have more limited revenue potential, but it might be more consistent revenue, which might be a preference for you. Well, transient campgrounds, they may require more upkeep and may be more volatile, but they may generate higher overall revenue as a result of that. So consider the possibility of a hybrid model. Maybe you want to capture a little bit of both. That's generally what we target. Number 8, value add or stabilized. A value add RV campground is one that has the potential for improvement through renovation, and it may require some additional investment to increase its overall revenue potential. Whereas a stabilized campground, on the other hand, is already established and it's already generating steady revenue, and you're just there to be able to maintain that revenue. A value add campground might offer a higher overall return or IRR or ROI in the long run, but it also requires more risk and more effort to be able to get that investment going up front. Whereas a stabilized campground may offer a more predictable revenue stream with less overall risk, but it might have lower ROI over time because it might have less upside. So consider your investment goals, your available resources, and your experience in the industry. Number 9, financing. Analyze the previous ownership's financial statements to determine the campground's revenue, expenses, and the overall profitability. And then make your projection or your pro forma for what's possible. Financing is an important aspect of acquiring an RV campground, and the various options are available, including, generally you can have your debt and your equity, and you can look at private investors for debt, but generally we're going to go with banks. And then for your equity, you may work with personal capital or private investor capital, or maybe you're a bigger group and you get to the level of looking at institutional capital. So consider your investment goals and your available resources when you're choosing financing option, and ensure that the terms are favorable and aligned with your long-term goals. And number 10 is franchise or not to franchise. So examples of popular franchises are Jellystone, KOA, and Margaritaville. An RV franchise campground can offer brand recognition, which can go a long way with your marketing. And it also has established systems and processes, which can be helpful as a new owner. But it will require payment of franchise fees, which will affect your overall P&L. And it's going to also require you to sort of follow the franchise guidelines, which may or may not be in alignment with how you'd like to run your overall business. Whereas a non-franchise RV campground offers more flexibility and autonomy, but it's going to require you building the brand and developing the systems and processes all from scratch. So consider the pros and cons of each option and just choose based on your investment goals and your available resources. They can both be great investments. And as a bonus, we want to hit on a few other key points. We have your existing reputation. Check out the online reviews during your due diligence and check the ratings to get an idea of the campground's existing reputation and level of customer satisfaction. Those things can take years to change. Check out the competition. Assess the level of competition in that market and identify the unique selling points for your campground and make sure you're priced competitively. Also, always check out your legal and regulatory compliance. Ensure the campground complies with local zoning, health, and safety regulations. A lot of these places were built many years ago and are no longer in compliance with today's standards, so make sure during your due diligence you're spending a lot of time and attention around the regulatory compliance. Acquiring an RV campground can be complex and it can be challenging. We often compare it more as an art form than an exact science, especially even just compared to other real estate types. But establishing a clear set of criteria can help you make the informed decisions that you need and ensure that you're investing in a property that aligns with your long-term objectives. Well, thanks for tuning in. As always, if you've enjoyed today's video, please don't forget to like, share, and subscribe, and we'll see you on the next episode of Requity Insights. Thanks for tuning in to another episode of Requity Insights hosted by our team at the Requity Group. You can find recordings of all shows along with our opt-in form to set up a call and view future investment offerings on our company website, therequitygroup.com, also listed in the show notes.